You're tuned in to Agriculture Today, and we start our Wednesday show talking about timely topics in agricultural law and taxation with K-State and Washburn law professor Roger McEowen. Roger, thanks for joining us today.
Good to be with you, Shelby.
Roger, first wanting to touch on tariffs, and this is included in a blog article, and in there you have, will tariffs be good or bad for agriculture, and what's your take?
Yeah, this is just a short piece that I have on my blog. My longer discussion of this is on my Substack, which is subscription-based. But I think the short version of this is we need to look at this in the short term and the long term because there's a difference between the two as to whether it'll be good or bad for agriculture. But what the president is trying to deal with largely is attributable to poorly structured trade deals over the past 40 years. In the U.S., what he's seeing here is the U.S. running a trade deficit with practically every country that we export ag products to. And a major contributor to that problem is higher tariffs that those countries impose on U.S. ag products that come in compared to the tariffs the U.S. imposes on their ag products that are exported into the U.S. So in the long term, if the U.S. can achieve parity on tariff rates, that would be good for the U.S. farmer and rancher. And of course, there's going to be a short-term hit until the tariff rate negotiating is completed, which is what we're going through right now. And just the most recent news is that 70 countries have already started negotiations with the White House to drop their tariffs, and some have announced they're going to eliminate them completely, Vietnam and Israel in particular. And now Japan is at the table negotiating tariffs. So if we can get tariffs down, that's good for world trade, and that's good for the U.S., and that's good for the U.S. Farmer and rancher. And if we can get them eliminated, that'd be great. And I think that's what the White House is trying to get to. But parity, balance these things out.
How does tax policy potentially play into tariffs?
Well, that's a big deal. The whole idea of tariffs and downsizing government and tax policy, they all fit hand in glove together. Tariffs can be more powerful if the size of government is decreased. Now, the president has referred to tariffs that we had in the late 1800s and in the early 1900s before we had the tax code because that's where we generated revenue from. At that point in time, the government expenditures as a percentage of GDP was about 1.5% to 2% of GDP. Now we're 10 times that. So you would have to have a relatively higher tax rate to generate equivalent amount of revenue to replace income tax. So by downsizing government, that means that tariffs would not have to be as high to generate sufficient revenue. But even if you had it at 100% right now, you couldn't offset all of the tax revenue that is brought in. So the tariff policy and reducing tariffs and reducing them in Europe, reducing them in Japan, China, Canada, Mexico, because people don't realize that Canada has some just outrageous tariff amounts on ag goods that we try to get into there, particularly dairy and timber, and we don't tariff their goods. And so there's an inequity there that he's trying to balance out. But when you combine that with tax policy, now we have the Senate that has adopted the framework that the House adopted to do a tax bill. So now we can go forward on tax policy. If we continue the Tax Cuts and Jobs Act provisions and then add in what the president is wanting, that means farmers and ranchers will continue to get the 20% qualified business income deduction. You'll get a 15% rate on domestic production of ag products if you're a C corporation. You're going to get 100% bonus depreciation. They're going to try to make that retroactive. Those are incredibly important to producers. The downsizing of government and tariff revenue can help pay for that. So this is all important that all three of these pieces of the puzzle come together, and hopefully sooner than later so that we can advise people as to what tax policy will be going forward so they can make decisions now.
And something else that also sometimes needs advisement on, deferred payment contracts. And there's a few different rules or specifications people and farmers need to make sure they have right when they're putting together these contracts.
Yep, that's right. And this is the time of year that many farmers will sign those deferred payment contracts. And, of course, what they're trying to do is defer the crop that they're going to harvest, the income from the crop they'll harvest this fall, into the next year because they've already deferred last year into this year. And so you want to push this year into next year or you have a pileup of income. My point is, in raising this now, is make sure that you have the right written contract. You have to have certain things in those contracts to make sure that you're deferring that income properly, because you don't want the IRS to say, no, you didn't properly defer that. We're going to include that in income this year. So don't have the sale income credited to your account, and make sure the buyer does not set the proceeds apart for you. Make sure they don't allow you to have access to that money in the current year, even if you wanted it. So those are the three major requirements that these deferred payment contracts must satisfy. And then make sure the price of the goods is set at the specified time for delivery, but payment is deferred until the next year. So those are the major points. There's some finer points in there. Those are the big ones to keep in mind when you get into a deferred payment contract. If you're uncertain, see your tax counsel.
And for these contracts, is there a key that maybe adds a little bit of flexibility into them?
Well, one of the things, if you have multiple crops, I would suggest that you have a deferred payment contract for each crop, because the rule on deferrability is that it's 100% deferrable. Whatever you have under a contract, you either defer it or you don't. And you just defer. You don't make an election on the return. Deferral is just simply by reporting it in the next year. Or you report it in the current year and you don't defer. So there's no election. There's no form that you make. You elect out of the installment reporting by reporting it this year. That's your election out. Otherwise, you're deferring. So if I raise corn and soybeans and wheat, for example, if I have one contract that governs all of those, I'm either deferring all of the income from all three of those crops, or I'm reporting all of the income. I have no flexibility other than deferring it all or reporting it all. If I have a contract for wheat, a contract for corn, a contract for soybeans, I could defer corn and soybeans and report the wheat or any combination thereof. I've got a lot more flexibility in my tax planning. When I come down to the end of the year, again, I don't have to make that decision until after the end of the year, where I have a good picture of where I stand tax-wise. Maybe I could use some more income this year, fill up a tax bracket, not push myself into a higher bracket, or maybe I've had a really good year. I need to defer all three of those contracts to the next year. My point is, if I use multiple contracts, I have flexibility.
And while we're thinking about different things with taxes, easement tax issues, and what are some different ways that an easement can be done?
Easements are a big issue for farmers because you can get pipeline easements, you can get transmission line easements, could be above ground, below ground. Various types of energy companies have easements or seek easements on your property. One of the things you need to be aware of is there might be tax consequences associated with granting an easement or selling an easement. And the questions that come up would be, can I offset some of that payment by my basis in the land that's affected? Well, you might be able to do that. And in my article, I kind of walk the reader through the various types of easement payments that you might receive and what the tax rules are so that you're not paying more tax than you would necessarily have to.
Something else included in this blog article, you talk about warrantless searches. And what is a warrantless search?
Well, this is a constitutional issue. The Fourth Amendment says that the government has to have a warrant to search your property. You've got this expectation of privacy, and in those areas such as your home, there clearly is an expectation of privacy. The government has to get a warrant from a judge to be able to search that. And the catch here is, and it's an important one to agriculture, is back in 1924, the U.S. Supreme Court said that Fourth Amendment protection does not extend to open fields. Those are areas that the court said is immediately surrounding and associated with the home. Once you get beyond those areas known as the curtilage of the home, so the yard, any outbuildings associated with the home, you get into open fields, the government doesn't need a warrant to search those. Well, we might think, well, that's not a big deal, but it can be a big deal because don't just think of police here. You want to think of parks and game officials, game wardens that are looking to see what type of hunting activities you're doing. Are you baiting birds? Are you using illegal types of decoys? Well, that might be in a field, could be on the interior of your property, but it's away from your home on your farm or your ranch. Well, does the government need a warrant to search that? That's been an issue that's there have been several prominent cases in recent years, and several states have adopted more legislation on this to protect those areas from warrantless searches.
Is there anything people can do?
Well, one of the things you can do is post your property. no trespassing, and government officials are supposed to respect that. I say supposed to because we get cases with respect to that also. But a reasonable reading of the Constitution would require the government to gather probable cause and secure a search warrant before entering your property. And again, as I said, posting is going to help. That may not solve the problem, but it certainly should be respected by the government and can help avoid these problems.
And when it comes to posting, is just a simple no trespassing sign enough?
Posted in a conspicuous area, yes, and probably multiple signs, not just one down by the road. You want it posted around your border in certain areas that might be heavily trafficked.
What can someone do then if someone does come on their property without a warrant and no trespassing is easily posted?
Well, try not to take the law into your own hands. Call the local authorities, the sheriff, and have them investigate it and take whatever measures need to be taken.
Roger, I appreciate you taking the time to join us today.
Thank you, Shelby.
That was K-State and Washburn law professor Roger McEowen. I will link his blog article titled Ag Law and Tax Ramblings in today's show notes on agtoday.net.